Hey, how are you? Welcome back. This week, we're going to go back to our normal schedule. Primary reason is high beta tech earnings, for the most part, are out of the way. So therefore, there's really no reason to focus on the micro. We can go back to the macro and start going back to our regularly scheduled programming, so to speak. We're going to go a little bit more sector this time with some FANG, and then we'll wrap up with a look ahead for where things could go. The reason being is because anything that's moving the market is now out of the way. The last to report that's going to be a market mover, where that is the most important to the market, is NVIDIA, and that's a few weeks from now. So we don't have to worry about that. So we'll just focus on the here and now, and then how to go about this. Friday, what a day, huh? It wasn't even earnings driven. Friday, just for context, the downward revisions in payrolls were so ginormous that you have to go back from a non-recessionary standpoint all the way back to 1968 to find the last time where we had revisions this large, going back May and June. That's how big these revisions were. It is a big deal on the payroll numbers. There's a note out by Goldman already saying that they're expecting downward revisions to continue. We'll see what happens come September, but they're expecting downward revisions, which falls into basically the economy is not as strong as some people would like to believe. Now, whether it's political or not, obviously, you'll all know the news that the head of statistics was let go on Friday. That brings its own challenges. One of the things that it will be bringing is if data is not liked and the person who's collecting the data gets fired, then we have to start having to reconsider whether the data is even legit or not. So that opens up its own world of problems. You had a Fed meeting on Wednesday, which initially the statement sounded rather dovish. Then once the press conference started coming along, that's when it really, really got more on the hawkish side. So the way to look at this is that he basically said that if they could raise, they would, but they're not raising. So that's like a win, the fact that they're not raising. So he was incredibly hawkish. Now, with that all being said, and we'll get into the stocks in a second, what does that mean? The reality is he's got a tough job, okay? You have to think about it. Here's a guy who got inflation down from 9% to sub 3, at least according to government calculations, kept employment relatively stable, has kept the economy relatively strong, and yet everybody wants him fired. Think about that. Like, everybody wants him fired. He doesn't have an easy job. Is there some political motivation, and whether or not he's cutting or not? That's beyond the scope of this discussion. But the reality is that they don't have an easy job. So you have a hawkish-leaning Fed, plus you have these revisions to payrolls, and you had a market that was, to a certain extent, definitely overbought on the short term. You get Friday. Now, do we continue? It's very possible, because if you look at the way, now we'll get into stocks. If you look at the way things went, so we basically gapped down on Friday, below the 8-day, below the 21-day, we closed. We haven't been below the 21-day like this with power going back all the way to April. So is it possible we may go to the 50-day? It definitely looks like it's in the cards. Do we go much further than that? I don't know. Breakout 101 will tell you at some point you got to do some testing of breakout levels. So you could see, stop number 1, the 50, and then stop number 2, down here at like 60-50. Stop number 3, somewhere around 59-60, 59-70, let's say. And then maybe we start getting into the gap, going back to the gap back in May. It's very possible. I'm not saying it's going to happen. I'm not saying that we're crashing. That's not what I'm saying. What I'm saying is that the possibilities are there. We could also just chop around over here further and then decide where we want to go from where we want to go. Earnings have been coming out. They've been relatively good. Some companies are saying good things. Some companies are saying things, but for the most part, it's okay. The problem is, and we're going to get into a couple of names, is that some of these names have been so run up into earnings that it was basically pop into earnings, get the number, get a gap, and then they sell off the next day. You saw it in Netflix, I'm sorry. Yeah, you saw it in Netflix, you saw it in Microsoft, you saw it in Google. Really, Netflix, not as much, but definitely Google and in Microsoft, you saw it. They had pops. I think they were up 5, 6% going into the next morning. And then they sold them off all day long. Some companies, people are still hiding there. Netflix, I know that it's been struggling a little bit, but people are still hiding there. Relative terms, it's doing very well. Granted, if you're in the position and you don't have such great prices, it sucks, and it hurts. But everything will come. Good companies will always be rewarded with higher share prices. Let's just get right into it. Okay. So that's the S&P. All right. Let's just look at NDX quickly because obviously it's the same deal. It's literally the same deal. Okay. I'm not even going to regurgitate the numbers because then obviously the numbers are different, but the levels are basically the same. We may not even get to 50 over here. We may just hold and then bounce. So you kind of have like a little bit of a double bottom over here, possibly, and bounce. You can see the same thing in the S&P, also S&P cash. You have this double bottom over here, right over here at like 6,200. It's very possible we could hold here and that's the end of it. It's just something to keep in mind. Okay. Let's go through the names quickly and we'll go through sectors and then we'll wrap it up. Okay. So Apple, the numbers were okay. I think they weren't awesome. You had the situation where they said they were going to be taking about, I think, if I'm not mistaken, a $1.1 billion charge due to tariffs, which is also not helping things. And not just Apple, but everybody in general. This whole tariff thing is definitely not helping things. Obviously, for those of you that don't know, there were issues in the copper markets, and then there was some tariff news, and copper got slaughtered. Like 20 was down to almost 22.5%. Well, we'll get to it in commodity corner. It just got slaughtered. But Apple, it was, to be honest with you, it was going into the numbers, coming out of the numbers. Again, I still feel that there's better places to be. From an investment standpoint, they're okay. They've got their own little problems with how they're lagging in the AI space. I mean, there's definitely better places to be. So the first one that's a better place to be is Microsoft. Microsoft is great. Not just the stock, the company itself is doing very, very well. They had some issues with Azure. They've found ways to fix it and correct those issues. And now things are going well. Company is doing well. It's the new Apple, so to speak. Granted, look, they were running this up, and we talked about this. They were running this up into earnings. You get the gap. They sold it off all day long. They'll get a gap fill and see what happens. Let's go to Amazon. Amazon, listen, if you look at it, they were running this up. They slammed it back down. Yes, it was down 8% and 1/4% on earnings. In truth, it probably needs a couple of days. Usually want to wait like 2 or 3 days before, from an investment standpoint, to kind of go buy into it. Still a good company, nothing wrong here. Yeah, it's got a reset. A lot of these companies are getting reset. And we've been talking about this for weeks. We've gone so far, so fast, that it was inevitable that there were going to be quote unquote hits to stock prices. Okay. Google looking fine. Probably want to see reclaim these lows here, like 192, 193. Before dabbling with it. Meta held up better, but you are getting, I wouldn't say this is an island reversal. It's not really but it's really an island reversal. You want to see a green day over here, but it's getting a little bit of a quasi island reversal. It probably looks to come back into the 740, probably the 730 area. That's probably where it's looking to reset. The video is looking great. Again, they haven't reported yet, so we'll get to that when we get to that. But that's looking fine. Broadcom looking fine. CrowdStrike bending. I wouldn't say it's broken. It's just coming back into a chop zone. So hopefully, maybe it'll find some support over here and then look for a build out to go back. Netflix has been a little bit harder. Netflix is not dying. It's quasi melting, but again, if the market is going down, then Netflix is going to go with it. But it is holding up relatively well. I would expect that as long as the market holds in there, this probably is going to reclaim, and we could see it back up here by the end of the week. Yeah, I wouldn't be shocked by that. It's just needing some time to just rebuild. Last but not least, ServiceNow. This is broken. This is a broken name. If it takes out this, what's this price here? This 898, let's just say 898. If it takes this out, you're looking at a gap fill all the way down to 833 is probably what you're going to get out of this. Now, the reality is you could say it's making a double bottom, but everybody could see this. So it's possible that it just breaks, gets some people in there, and then goes back up. I would be just careful. Okay. Just be careful. Okay. Just look quickly at some sectors, just quickly. Go to IDB, Biotech, so holding in pretty good. Let's just look at XBI also. Holding in pretty good. I like the IBB better. It's more large and more large mega caps. IBB is looking pretty good. XLE, Chevron had really good numbers. Exxon too. Energy is actually holding up, is doing pretty well in this environment. Not so much with fuel prices, because that's not really where it is. They're just doing well in the way they're managing their businesses and how they're growing their businesses. So XLE is doing pretty good. OIH, I mean, listen, they're not rock stars, but they're holding up. So if you need places to go and places to kind of hide, they're pretty good in terms of that regard. They're running their businesses well. That's Chevron, that's Exxon. They're not falling apart. Yeah, things again, earnings always has a way of making things a little bit more complicated, but they're holding in relatively well. Just last, we'll end up with an IC FANG. NYSE FANG as an index has all those names. We've gone over it. It's holding where it needs to. It's probably going to test the 50. I would not be shocked if it does it. I think that this week is going to be a little bit interesting because the biggest problem you have, and we'll just go back to this a second. The biggest problem you have right now is headline risk. It's by far and away the biggest issue you're going to have. Things are coming fast. There's a lot of misdirection in headlines. There's a lot of misdirection, and things are being said at 9 o'clock, and then at 4 o'clock, they're being taken back. And then at 10 o'clock at night, they're being reiterated. And then at 7 o'clock in the morning, it's being changed. So it's really challenging. So you really have to know what you own and why you're in it, and just be safe, be careful. We might do a midweek recap just to see what's going on. But thanks for watching. We'll see you on the next one.